I'm Dan Mitchell of the Cato Institute. Today, we're going to do something completely different. Instead of one of the usual Center for Freedom and Prosperity videos, we're going to show you a recent video put out by the White House. It features Austin Goolsbee, the head of Obama's Council of Economic Advisors, and he's trying to explain why it's a good idea to impose higher tax rates on those evil, bad, rich people. But we're going to pause that video every so often for truth in advertising segments. Let's hear what the Obama administration has to say.
You may have been following, we've got a big back and forth going about the tax cuts. What I wanted to do today is just break it down real simple so you can understand exactly what the debate is about. President George Bush passed tax cuts that will expire at the end of this year.
So far, so good. That's a fair description of the issue.
And what I've done here is we got a ruler and measured out the size of the tax cut, is how big the circle is, by your income, which is listed at the top, from low incomes up to people who make more than $1 million a year. Obama would preserve a couple $1,000s a year tax cuts for virtually all Americans, and even for people who make a lot, they get to keep the tax cut on the first $250,000 of their income.
That part also was accurate, at least in a technical sense. When you have across-the-board tax cuts, people who pay a lot more in taxes tend to get more tax relief. Wow, what a brilliant revelation. But the problem is that Goolsbee's presentation is based on the zero-sum class warfare approach, which assumes that people are trapped in their current level of income. We're showing some research on the screen. As you can see, there is substantial income mobility in America, and there would be even more if we reduced the burden of government so it would be easier for people to climb the economic ladder. But that's just part of the story. We also want the economy to grow faster. So not only would people be able to rise and fall depending on their talents, abilities, and willingness to work hard, but the overall economy would expand. To use Austin's whiteboard example, more growth and prosperity means the circles can be bigger. And if the pie gets larger, everyone can have a bigger slice.
Under the Republican plan, however, people making more than $1 million a year, they're going to be getting a tax cut of more than $100,000. That's expensive. Giving these big red eggs to the very high income people would cost $700 billion that we would have to borrow to give it.
Wow, did you catch that? Goolsbee actually said that's expensive. Giving these big red eggs to the very high income people would cost $700 billion. I've never heard so many loaded terms in such a short period of time. First of all, it's big government that's expensive, not tax cuts. Second, letting people keep their own money isn't giving them anything. I know people in Washington act like all of our output belongs to the state, but that's not the way it works in a free society. But Goolsbee's comments are not just philosophically corrupt, they also miss the point. The purpose of lower tax rates is to boost economic performance. And if you increase growth, you increase taxable income. So if we stop the White House plan for higher tax rates, that won't mean the government misses out on $700 billion. There's going to be some revenue feedback, what is known as a Laffer curve effect. This doesn't mean, by the way, that lower tax rates necessarily lead to more revenue, or that higher tax rates cause revenues to fall. But it does mean that the administration's simplistic estimates, which are based on the absurd notion that tax policy has zero impact on economic output, are laughably inaccurate. Let's look at an example of the Laffer curve in action. Here's a chart showing the amount of taxable income reported by rich people in 1980 when they faced a 70% tax rate. And here's how much of that income the IRS took. Reagan then reduced the top tax rate all the way down to 28%. So what happened to tax collections from the rich? As you can see, taxable income skyrocketed, and the government collected 5 times as much revenue. That's not just the Laffer curve, that's the Laffer curve on steroids. Obama now wants to run this experiment in reverse. I guess time will tell what's going to happen, but Austin may want to hedge his bets on whether he collects that $700 billion. Back to the tape.
If you ask objective economists and analysts around the country about what is effective, you will find that everyone agrees that these giant tax cuts for very high income people are the least effective thing that we can do to get the economy growing.
Whoa, there's another doozy. Did you hear him say everyone agrees lower tax rates are the least effective way of helping the economy? First, he's trying to pull the wool over our eyes. Contrary to what Austin said, and actually what I would like, nobody's talking about lowering today's tax rates. The issue is whether higher tax rates on investors, entrepreneurs, and other so-called rich taxpayers are a good idea. Is Goolsbee right? Are high tax rates relatively harmless? Not surprisingly, the answer is no. Indeed, upper-income taxpayers are far more sensitive to changes in tax policy than the rest of us, largely because they have much more control over the timing, level, and composition of their income. They can choose how much to work, save, and invest. They can opt for tax shelters when rates become too prohibitive. Heck, even the Keynesian economists, the ones who endorsed the failed stimulus, are saying that this is a very bad time to increase tax rates. I can't resist, by the way, putting this chart on the screen. The lower line is what the White House claimed unemployment would be if we squandered more than $800 billion on the so-called stimulus. The middle line is what the White House said the jobless rate would be if we did nothing. Now, see the dotted line at the top? That's the actual unemployment rate we've had. With this type of track record of inaccuracy, the White House is hardly in a position to make claims about the least effective ways of helping an economy. Let's go back to the tape.
And so what's happening in Congress is that the people that want this are saying nobody here can get any of these tax cuts unless we agree to give this big red goose egg to the people making more than $1 million a year.
Actually, both sides are playing a game of chicken. This isn't a philosophical or economic question, but in the interest of fairness and honesty, I didn't want to let him slip through another fast one.
It doesn't make any sense, it costs too much money, and then we know it doesn't work.
Huh? Cost too much money? To quote a great president,
there you go again.
Here's a news flash for Austin. It's not the government's money to give. We're talking about whether people who produce are allowed to keep more of the fruits of their labor. More important, Goolsbee tries to slip in the assertion, we know it doesn't work. Let's quote another great president.
The purpose of cutting taxes now is not to incur a budget deficit, but to achieve the more prosperous, expanding economy, which can bring a budget surplus.
In a strange way, I can admire Goolsbee for being a good soldier. He's jumping on a grenade in order to promote the president's misguided policy. I just hope he writes a book after he leaves the White House so we can find out how embarrassed he felt about trying to defend the indefensible. On behalf of the Center for Freedom and Prosperity, thank you for watching, and please share this video with your friends and colleagues.